Hello guys, glad to have you on board again. Today we are Wednesday, so this is the educational video usual day. I'm a little bit late on the schedule today, obviously, and I might have to do this one a little bit quicker than the usual because of an appointment necessary right after. But anyway, let's get straight to the point. I totally forgot to put this one for a vote, so I have to somehow pick a random topic today. It was a tough choice to make because we somehow dealt with many of the technical purposes lately. Obviously, we can do some part two of some specific topics, but in this manner, I'd rather like to have you guys voting for it rather than having an imposed theme over this topic. So I'll leave it for vote by next week. Hopefully this time I won't forget to put it out there, and you'll be able to choose for a technical context to talk about. Anyway, we still had something to talk about today, so having to pick something, I just decided to talk about something that is what I'm getting through at the moment. So I just wanted to share about that because I think everyone can learn from someone else's mistake, and I do hope that you can learn from my personal mistake as well. Not even saying that most of the mistakes I've made are mistakes that most of you guys have been doing as well lately. So I think that by sharing on this might help you as well, because you probably felt that anyway. So let's get to it. What we're going to be talking today doesn't really impact all of the intraday traders and short-term traders. If you deal with those time frames, then you're totally fine. And what we're going to be talking about today is none of your concern. Just move on. I mean, if you're a pure intraday or short-term trader, this is definitely not for you. If you're some people have multiple profiles, me included, and if you want to be like more of a swing trader, pure swing trader, or an intraday swing trader, or whatever, there are some alternate ways that the natural biases may impact you. Talking about those biases, I'm talking about the good old ones that we already have dealt with. We've already made videos with them. They're always the same two biases, but they just occur into swing trading time frames with a somehow of a different manner. It's a hidden manner, so I think that it's about time that we really get to talk about these two, because I think it can help a lot of people. And I think by just putting the finger right where I should have done long ago, I think I'm going to make myself a better trader with this included. So it's not just about sharing about stuff I learned years ago, it's about sharing about a stuff I just learned a few weeks ago, and thankfully will help you into my future trading. Me and you, hopefully as well. So let's get to it. So swing trading podcast today, psychological manner podcast on swing trading. So the most dangerous couple of biases, those you know about, that this is the fear of uncertainty, which is the most impactful one in trading. The second one is the lack of patience, so impatience bias. Take that fucking couple, and this is simply generally explaining like 99% of most traders' mistakes. Talking about not mature enough trader, which means when we get mature in trading is when you experience those biases. When I manage to identify the problem, work some defenses against them, because once again, you don't destroy biases. You can't. These are natural biases. You just can't erase them. What you have to do instead is to put some defenses so you at least limit their effect to the minimum into your trading strategies. They'll always be there. They always come and go. You just make sure that you put them as far as necessary so they don't induce any impact on your trading decisions. That's what we're doing in psychology and trading. Just cut the crap. We're not here to cut some part of your brain so you don't feel emotion or whatever the fuck some people might be thinking at some points. This is delusional. The reality is that you'll always be a freaking human, and as long as you are, you're going to feel emotions, and those emotions will be either positively impacting or negatively impacting your trading. You just can't cut one to get just the other. So it's just about limiting their impact. Anyway, let's get to it. So in swing trading, those fear of uncertainty and impatience biases don't necessarily put up the way we talked about them on the previous podcast. Because on the previous podcast, I basically told you about the way I used to work myself out of these biases when I was intraday trading years ago. And so I was talking about something I went through really years ago, and I tried to give you my tips and tricks to get the hell out of this, or at least, like we said, limiting the impact as much as you can. But in swing trading, I have far less experience. And I always thought that what happens into other time frames were pretty much in the same game and in this happening the same way into different time frames, and that as I got experience enough with intraday, I would be fine somehow discovering swing trading. And that's not the case. Obviously, I'm still learning swing trading. I don't nearly think that I'm mature enough today in these time frames, and I still have a lot to experience. And I think that just 2019 just gave me a milestone because I get to identify how those freaking couple biases managed to get the hell out of me and get the crappy decisions I've made in 2019 and how they impacted the way I trade. So remember that anyway. If you want to learn something when you've made mistakes, the first rule is to freaking accept that you've made a mistake. So if you think you've done it all fine and you're just good and that's the market who was irrational or whatever the fuck that is, then first lesson, no way. You are generally making mistakes in that purpose. That's obviously an area in which I've been complacently been most of 2019, thinking that the market was going irrational and not me. I mean, I wish I was clear-sighted back in those days, because I should never have got myself into these places. I would never have done such thing in intraday timeframes, but things have been impacting my trading over the year, and now we're going to talk about it. So, same old couple, right? Always the same things, just happening in a different way, which means I know how to handle those things. I've been putting defenses so they don't impact my trading into shorter time frames, but I wasn't careful enough to not see them coming into swing trade. I mean, I would just even call myself foolish enough to think that I was ready to go for swing trades without learning some mistakes in the meantime. So now that those mistakes have been made, I see the pattern, I see where the fucking mess I've been putting itself, and now I can put it off the table. At least, like I said, away and as far as possible. So, all right. So, first part: how does this fear of uncertainty bias will get through you when it comes to swing trades? So remember what we said for intraday. I told you that generally the fear of uncertainty will generally force you to alter your trading management, which means you're gonna take trades when you shouldn't, you're gonna get out of trades when you shouldn't, you're gonna trade where there is, rationally speaking, not a single reason to do. So that's the symptom that you must be highlighting in order to fight the fear of uncertainty bias. The impatience bias no, sorry, I just gave you the couple. The impatience bias is the one that generally forces you to exit a trade, whether it's a partially invalidated trade or a trade just going well, but you're having a look at the chart so much that you think that things are going to go bad, that things are going to turn on the opposite direction, and that you might rather like to take a profit right now than waiting to turn a profit into a loss. So this is purely stupid stuff, but this is the impatience and fear of uncertainty biases purely combining themselves to put the most irrational decision possibly you can. So this is how you do highlight those things into normal trading conditions like intraday and whatever. But these things also get to work into swing trades, but in the most hidden manner. Like they're going to work through time and obviously I'm going to explain that. So let's put a chart in here, because I've done for the French guys, and I would like to do the same podcast in here. So let's take a classical XY axis analysis in here. So let's, sorry, I'm just going to get, damn it. Sorry, I'm trying to be a little bit of in a rush because I know someone is going to ring my bell in a few minutes, and I'd rather like not to be this to happen live. But anyway, if it does, my apologies. So let's consider that the impact, all right, oh, sorry, with an M would be better. So impact of these biases into your trading and time frames, all right? So time frame scales. Now we're going to scale time frame with a parabolic damn it, all right, with logarithmic scale. So let's call it that 1 minute time frame, all right? And we take this, damn it, I'm not going to make it. So let's call that 15 minute, all right, let's call that 4 hours, or let's say 1 minute, 10 minute, 1 hour. I mean, you understand the process, 1 day, 1 week, 1 month, all right? So as you do get to higher time frames in obviously a logarithmic scale, because whether you like it or not, that's how things are. They're logarithmic thing anyway. So if you put it this way, then you've got somehow of a logarithmic curve that does that in terms of time frames, logarithmic things. All right. So as far as you get from time frames, you got more of those shorter time frames, including them. And this part, and we're eventually going to be doing something today, because there are some different way of introducing those biases when you get it to be a scalper, and that could be a really interesting topic for the future, to make a podcast about how those fear of uncertainty and impatience biases will interact with your trading into scalping strategies. Because I've been there, obviously, I've been a scalper that's a lot older, but I still have some memories of what biases I might have impacted back in those days. I know very damn well about the intraday biases, because that's the one I've been experiencing the most. Like, I've been intraday trading for almost 6 to 7 years. And now I'm getting into swing trading for the latest 2 years, and now I'm getting to understand how the fuck and how differently those biases just crippled into me all over again, introducing the same old stupid decision makings, and these are the stupid decisions I've been making over 2019. But now I think I finally managed to find the issue, and I'll be able to work myself out of this. So the goal in here is to understand that what I taught you in the previous podcast is most likely dealing with this, like intraday trading, and those biases will impact those time frames with pretty much like this type of curve, all right? So the tips and tricks I gave you to overcome fear of uncertainty and lack of patience into the previous podcast works just as well. But as long as you get to higher time frames, this thing starts to dampen. Right? The effects of those tips and tricks will be narrowing, because obviously, and this is what I just discovered a few weeks ago when I made an analysis on my problems, I just discovered that actually those things are pretty much shifting, which means the risk curve is pretty much always constant, all right? But the thing is that it's differently shaping itself. As you get to higher time frames, the way you manage intraday risk will dampen their effect, because other risks will take the place. And it's basically another way that the impatience biases and fear of uncertainty will show and will interact with your fucking brain. So let's cut the crap and get to the chart. I think the best way to illustrate this is to take the actual purpose of the problems that ripple through me all through 2019. Let's get to the fucking SPX. So let's get to this. All right, here we go. We're going to have to make this one real quick. So the impatience biases is obviously the hardest one to figure out. I think out of the couple is the one I basically figured out the latest, but it's probably because I personally have a lot of problem with patience, so obviously that's the hardest one for me to figure out. But anyway, fear of uncertainty, I think, was the easiest one to figure out. Might not be the one for you. I think it's on a person-to-person basis in here, and it's obviously impacted by your psychology. But I tend to believe that everyone, anyway, is impacted by this couple, just in a different amplitude, and it's going to be either easier or harder for you to figure out one of those two, depending on your personal psychology. So, I'll talk about my personal feeling in here, so you will have to adjust to your own one. But I think in any way, it's just a matter of magnitude and amplitude. But I think in any way, the way those biases are interacting with you are pretty much likely going to be the same that they happened with me. So how they actually managed to crawl right into your strategy is obviously, like I said, it's something subjective. It's something that you won't see coming, otherwise it would be easier. So the thing is, to identify, you need to roll back in time and try to figure out how when your decisions have been some way irrational. So it requires some self-analysis. So obviously that's really hard to say. So that's why I'm making this podcast today, trying to point you into the right direction, asking yourself the right questions, because yes, I assume most of you guys have been impacted, whether you figured it out or not. So the fear of uncertainty always shows up out of a starting point, when something that should happen just doesn't work as expected, which means generally that's a trade that has the perfect trading conditions or whatever, so very likely going to happen technically speaking, but chaos shows up and fucked it up. And what you're going to be doing, just like what you do in intraday, is that you're going to try to fill the gap. Because that's exactly the purpose of the fear of uncertainty biases, which means no matter what, you should have learned so far, and I did years ago, to understand that no matter how hard you try, you'll never ever be able to control any fucking thing with the market, that a trade is just a trade out of hundreds or out of thousands, and that the risk management gets its positive return only if you focus on those 1,000 trades instead of just one. So as long as you try to get emotional with one trade, already should signal that you're under influence. And I should have freakingly figured out long ago, which means I was totally under impact, and god damn it, I wish I knew that earlier. So when I started focusing on Wall Street, there was a problem just right there, and I should have seen that, because I know how those things plays. What basically fucked me up in here is that my impatience biases just rolled over into time frames I never imagined, because I know how to control my emotions into shorter time frames, because I've learned this the hard way as well, but long ago, way longer ago. But the thing is that going into swing trades, I've never seen swing trades fucking up that much. That's Wall Street in 2019. But still, that's chaos. And no matter how chaotic that is, I should just have got along with it, because even if that's Wall Street, even if that's stupid, even if these guys could create the biggest bubble ever and create some financial disaster eventually afterwards, I shouldn't nearly give a shit. But the problem is I did, and as I did, it started impacting my trading, and I should never have done that. So where's the first mistake in here? I'll let you think for a second, because I assume most of you guys will give a bad answer in this one. So the most immediate answer you might give, you might wonder, is that I shouldn't give a fuck. No, that's not the solution to the problem. Like I said, we're fucking humans, so you don't control what you think. All you can control is how it impacts your decision into trading. So what I think is what I am. It's not what I want to be. All right? Like, not giving a fuck is simply not possible to me. So I can't do any different than thinking that what we're doing with US economy is dangerous, and I can't just think any different. So what do we do with that? That is just the early beginning step of any trade, which means I have a personal bias in here, which means I will favor one side up against another. So in here, anyway, that's a decision. Like I said, every trade starts with this. If you have if you have an impact on what you're going to be trading, you've got two choices. Either you don't trade it, so you make sure you're not biased, and if you are, this bias must stop at the step 0 of the strategy, which means if you decided you want to favor selling, overbuying, or whatever that is, you can do that. That's not impossible. That's certainly not impossible. But it stops there. It says that you're going to look for bearish trades more than bullish trades. End of the story. This bias should never ever impact any other decision you're making, because all the rest is risk management, and risk management must certainly not be biased. Risk management must be tempering what you're doing. It's there to, even if you want to sell and the market goes up, you need to find the most predictably interesting areas to sell. That doesn't mean the market will sell, that just means you're favoring conditions for you to be successful. That's what risk management is about. How the fear of uncertainty gets to put itself in here when things should statistically go along your side, but it doesn't. So you're objectively being proven wrong, and technically you're likely going to be as well, but you're going to put something in between. That's exactly what I've done all over 2019, starting specifically when the central bankers started their shit. Outside of trading, yes, that's stupid. Central bankers shouldn't be doing that, whatever. But should I have used that to justify trading? No, I should never have done that. I should have used that to specify the fact that I will favor selling entries over bullish entries, but certainly not to justify selling. That should never have done that. So technically speaking, over 2019, I made no mistakes. Every area I sold was area I needed to sell because they were favorable. They simply didn't work. And where this thing actually started impacting my trading is that as things were not going as expected, this was just chaos. But instead of accepting chaos and risk managing, what have I done? You have all the videos to prove that for true. I don't delete those videos and I won't, because I think these are just the living proof of what happened all over 2019. Started at that moment. I started shifting out of technical assessing the market behaviors to get to whatever the fuck I felt to be pleasant, and what I felt pleasant at that day, to somehow fill those gaps of uncertainty. The market was just acting chaos, all right? And I know that chaos is part of trading, and I should have embraced it instead of trying to fight it. This is where the thing started to play. Just saying this makes the whole fucking point. When you're trying to fill some gaps, it's exactly when you're trying to get to feel the fear of uncertainty. How do you do this? That's exactly how we talked about this on intraday timeframes. How do you try to fill the gaps? When you're feeling uncertainty, you're just trying to hang on into whatever you can hang on to. All right, you're going to lie into whatever bet you can lie into. You're going to try to go into anything that is comfortable for you and where you can feel safe. But you're never going to be. Like I said, this is illusionary. This is just an illusion. This is just any way you just have one outcome for this. Embrace this fucking chaos, and the only tiny statistical bit of safe highline you can get just comes out of 100 trades at least, and certainly not one trade. So get emotional with one trade, and you're going to try facing and searching for that safe haven if things don't go as planned. Because anyway, sometimes things won't go as planned, just because that's how it is. That's not because central bankers done something. That's not because Wall Street's going irrational. That's not because of all those things I tried to put in there to fill the gaps. It's just some trades that didn't work, and I shouldn't have got anywhere beyond that conclusion. And I just did all that all through 2019, trying to explain, trying to understand, trying to rationalize all that shit. This was just chaos, and it still is, basically. And I should have just done what I just did a few weeks ago: surrender, let the fuck go, and just go back to technical. That's exactly what I should have done, and I should have done that month ago. Really seriously, month ago. So, as you start to identify those things, like I said, in here we basically talked about the fear of uncertainty, but you mostly know about this one. So let's talk about the other one, the one that basically allowed the first one to enter into my strategy, the lack of patience. This is my personal problem with trading. That was the hardest bias for me to figure out years ago, and it happened to be just being the same, just in a different time frames. The thing in here is that those processes I just told you about, like trying to fill the gaps and whatever, I know those things, I just don't do them into intraday. Whenever I try to fill the gap, I know I'm going to make a bad decision, so I just stop the process all by itself. The problem is, in longer time frames, I never expected that this thing will be as hidden as that, because time is really a bitch into swing trades, which means I just got myself into those irrational behaviors without even noticing. And that is where the biggest danger is, because you probably have done it as well. So just try to put a little bit of distance over what you've done, maybe, and I think most of you guys just got into the same traps as I did in 2019. Not to say I eventually even influenced you into this, and I'm really sorry about that, if that's the case. But here it is. If you listen to me into 2019, with all the bullshit I just basically used to cover up in that period in which basically I was facing just uncertainty, and in which I should just have got, like, who gives a shit? I mean, that's just a trade who doesn't work. I shouldn't have tried to justify myself. The thing is that I did, and I tried to fill the gaps, so I learned a lot of fundamental stuff. I started watching thousands of videos, not thousands, but a lot of videos, trying to fill those gaps, trying to understand what I felt like I didn't understand. But actually, I shouldn't have done such a thing. Just a little bit of macroeconomical elements are necessary, and no more than that. And moreover, the vision you have of macroeconomics, no matter how dampened it could be, and how impacted and colored this thing can be, and tainted, I mean, that's shaded gray area. I mean, some people may believe the macroeconomic projections are good or bad. It's just really tainted a lot. So anyway, these things, like I said, can only be impacting step 0 of the strategy, whether you will favor some selling activity or favor buying activity, but they certainly shouldn't ever interfere with your risk management. And they did, clearly did. How did they do this? Not into my entry points. Like I said, I really know how to manage fear of uncertainty. It's just, I never thought it would be acting in a different way. Fear of uncertainty, the easiest and the most dangerous way it's going to act upon you is that you're going to trade a lot, because you're going to see a lot of signals. And it's not what you should do. I haven't been done that. I didn't do that over 2019. The only mistake I've made was being a little bit too aggressive and trying to catch up on some H1 trade into the daily areas, which probably would have avoided me a couple losses, but tiny losses like 0.5% to 1% stop losses that somehow added to the global shit that costed me more than 10% when we were in this area. And that's the problem. It's tiny bits of mistake piled one on top of another that just basically led to hopefully what was my maximum security, because I have so many layers of security for my capital. That's just basically what saved me this year. I made no gains, and I'm clear with that. I fucked up my year, and most likely because of those bad decisions I've made in Wall Street. But not only, but the thing is, I would definitely have taken losses in Wall Street anyway, because that's inevitable. I mean, if you face any trader on earth that hasn't been taking a stop loss in this area, I'm just laughing out loud. This guy is not even a trader. So he's probably just a commercial bullshit liar, but certainly not a trader. I mean, every speculative trader on earth literally had to take a loss in this area. There's absolutely no choice otherwise. But anyway, taking loss and taking a 10% loss is a far different gap in here. I should inevitably have taken losses over 2019 in this area, inevitable, but certainly not a 10% loss, which means I've been under influence, and this influence is exactly, I think, the one we're talking about today. The fact that my impatience biases just allowed in all the usual bullshit biases that I knew about, but just didn't even see coming. Because these things, instead of happening an hour out of the previous hour or whatever, just somehow managed to happen day after day, and I just somehow got myself used to it in a way that I didn't even see the danger. The danger is, what have I done in this area? I was just having bad trades. That's just normal. And what have I done? Have just pulled myself under high pressure of watching a shit ton of video trying to figure out. I mean, what the hell is the point? Figuring out? It's like I would have figured out something. Yes, hopefully I've learned quite some stuff in here, but what I now get to understand is that this stuff is really gonna help me into figuring out economics, but certainly not how to trade. So in swing trade, actually fundamentals, who gives a fuck? Fundamental is important to orientate your portfolios and your trading decisions and your trading bias, not your trading decisions. So anyway, I'm going circle in here. So how did this thing get into my trading? Not by over trading, which is the most convenient thing, and some of you guys might have done that, like seeing too many signals. I didn't. But it got to me into a somehow more dangerous backdoor, which is it basically rippled through me into the way I manage my trade. Which means it's not the way it should be, but it has been impacting this way. The mistakes I've made over 2019 are not necessarily taking speculative bearish entries. I think I just done my job. I had a bias, I followed that bias, and goddamn, I wouldn't have done that different. The thing is, there were technicals suggesting the probabilities for bearish trades were there. The market just decided it otherwise, and that's it. I shouldn't have gone any further than that, taking my losses and moving on to the next trade. I didn't because I started thinking things weren't going normal. Yeah, I mean, it happens, and I shouldn't have gone any further than that. But the problem is, I started impacting my risk management. Video proving that. I told you about one rule that I can use sometime, but I freakingly overused that rule over 2019. It is that sometime I generally accept to extend a possible loss, to change the context of one scenario to one just bigger picture scenario. And that's the thing I started doing in this area. Like I was trading bearish trending scenario that totally failed. We were clearly not bearish trending at the moment, and I just changed that on saying, all right, bearish trend is failing, but we're probably going to have a bearish range. So I might keep this trade opened a little longer, as long as the position sizing is tiny and that I can afford doubling the stop loss sizing, which I did. I just accepted double the sizing. I never said like what some noobs have been saying, like I delete the stop loss and I go into denial. I don't do this kind of shit. I've worked myself out of this years ago. The thing is that I decided to say, all right, I'm going to shift the trading context from just one tick to the upside. I do this on other trades, but the thing is that I've done this thing one time, 2 times, 3 times, and god damn it, I shouldn't have done that multiple times, and this is what caused the extended losses I took. Anyway, the other way this thing got to me is by allowing me to fill these gaps. So as long as you're trying to fill a gap, there's a problem. All right? Whether or not it will feel like it's rational, it feels like this is the thing to do. Like I really think, I remember myself back in those days, I had to learn something. Something was going wrong, which means something I don't understand. The signals are so clearly visible and very high in terms of risk management. It's not possible that we fuck those signals in a row like that. Like we fuck a clear, clean bearish signal, and then we fuck a clear, clean bearish trending range signal, and then we fuck a clean, clear bearish range, a classical range signal, and we basically fucked up everything one after another. Still, that's not usual. But it happens. It's just chaos. So I just try to feel that thing, not because I don't know how to handle myself, just because it took so much time. I mean, this whole process has been going on for months. And it's basically because timing was so long that I just, one drop at a time, let the water in. That's exactly what happened. Just day after day, I just let myself taking lesser rational decisions and feeling a little bit more of those gaps by watching more educational content out there into specific things here and there, trying to look out for analysts. I mean, I've never done that in the past. And all over 2019, I've been looking at analysts. I mean, what the fuck? I should never have done such thing. So I've let myself influenced by other decisions, by other people's decisions, other people's interpretations, and certainly not the thing I should have just done, sticking to fucking technicals, accepting to be lost, to be wrong 1, 2, 3 times in a row, and taking 1, 2, 3, 4 times 1 to 1.5% stop loss instead of doubling those losses and putting these 1% multiple losses into 3%, adding on top of another, which led to the maximum 10 to 12% loss I accept, which means lucky me, I had this final trigger who basically said, all right, Phil, you're getting irrational right now. You're taking 10% loss on a scenario, which means you're really under influence. The problem is, I figured it out, lucky me, to stop these losses, but I didn't figure out the problem. The problem was still there. I just continued to fill those fucking gaps all over the year. And I shouldn't have done that. So, coming out from my mistakes, I think, first of all, is the first way to progress. I think most of you guys have been doing the same mistakes anyway. Let's just say that I probably influenced you. So now is about time to progress. We're getting into 2020, so it's certainly not about replicating 2019 mistakes. Remember that we need to stick to technicals. That's exactly what I've tried to do over the latest few weeks, trying to stop talking, because talking makes no sense. Talking is not going to change anything in here. The only rational thing we need to do right now is to wait for markets to show some signs of activity. We have not enough volatility to speculate, so we goddamn wait for this to show up. We do have a lot of pre-signals that things are returning back to normal, so we're going to be able to trade again sooner or later, but right now we need to wait for actual proof of this. Not because you think, not because some people think, not because whatever that shit is. We look at the fucking VIX. As long as the VIX don't move, we don't move. That's simple as that. This is technical. This is what I should have done back in those days. This is what I should have done long ago. I would say both. Thankfully, I'm finally back in the track, but that's so bad it took me so long. All right, it's really so bad. So I'm sorry about it. I'm really sorry. All right, but anyway, it's about time to progress. Just like most of the time in trading, we learn things by making mistakes. So don't blame yourself. I don't personally blame myself. I'm pretty actually lucky right now. I feel lucky that I figured it out. It's way too late. I wish I could have done that a lot earlier. It would probably have saved some profitability over 2019. But I mean, here we are. So either you take the best of a bad situation, or you just get yourself to crumble on your defeats. So yes, I learned my mistake. I think I just got myself a much better swing trader than I was a year ago. It costed me, obviously, a few pain in the process. It was freakingly long, but I mean, I would like to take the best out of it. Anyway, I'm gonna have to stop in here, guys, because I'm gonna be late. So I wish you a pleasant day, and I'll see you guys again later. I hope you enjoyed that today podcast.